moving on now from the question of whether private equity can drive Europe's next chapter of growth, which was the topic of the panel discussion that we just had, into the next question of this day before we go into the lunch break. And that's going to be on the traditional funding channels that have begun to tighten, as we've already heard during the course of the day, and how corporate venture capital is emerging as a stabilizing and also as a strategic force in Europe's innovation landscape. This panel explores how corporations are responding today to today's, as we've already heard today, very challenging financial environment. And for that featured, we'll have their names up on the screens right now in just a second as well, are Franz Zöchbauer, the Managing Director of the Verbund. We'll hear from Sylvia Stojilkovic, the Managing Partner of Clean Tech and Energy International at the company UnternehmerTUM. Christoph Ferle is with us, the Investment Director at Bosch Ventures, as well as Michele Luperini, who is Senior Investment Associate at Plug and Play. And the panel, which is ready right now, as I can see, will be hosted by Viktoria Ilger, who is the founder of Sustainable Transformers, which helps companies achieve sustainable success through collaboration and also innovation. We'll have all of them up on stage right now. Please welcome them with an applause. Thank you so much.
You all. Okay, great to have you all here. But I think we have an important topic, right? So, corporate venturing as a strategic force for Europe's tech sovereignty. So, I would say we start directly in, okay? Good. So, when we talk about innovation in Europe, I think we are not short on ideas, we are not short on technology, we are not short on talent, right? And we have over 35,000 early stage startups, so this is quite a lot. But still, when it comes to scaled innovation, we have some problems. And what we see is that a lot of founders in the growth stage leave Europe and go to other countries like the US, for example, or China. So one question to you, Michele, would be for me, why do you think Europe still struggles to scale innovation? So what is it, in your opinion?
Yes, so this is a $100 million question, I think.
It is.
And there are a lot of different things, obviously. It's a very complicated question to answer. And so one point is that I think Europe has a kind of seed mentality in a growth economy. So we have to change that. And to do that, one thing that we can do as investors and also corporates can do is to invest more in a growth stage startup. So this is something that we actually have the power to do ourselves. Other things that maybe we can, as a group, spend a bit more energy into lobbying would be to improve the regulation. So have a unified corporate regulation, at least for startups, because funding a startup is already hard enough, and you don't need to refund it 27 times for every country you want to expand into Europe. And then another point, I think, is kind of the tax problem in Europe. So countless different tax regulations. Here is one thing, in Italy is another one. And if you think about it, especially if you look at deep tech, it's much easier to fund a startup in the US, scale it there, and then enter the European market, than it is for a European startup to fund a startup, let's say in Italy, scale it in Italy, and then enter into another European country, and then do it again, and then do it again, and then do it again, until they have the scale to be able to jump to the other side of the pond. So I think these are all points that make it a bit harder for us as Europeans to create something extraordinary and bring it to the scale that is necessary to kind of succeed in the venture world, I would say.
Mm-hmm. Interesting. I think we also have corporates here, so this is a good point because the panel is called corporate venturing. So how can we bring in corporates in the game? Because what we see is that the venture capital has tightened a little bit in Europe the last 2 years, but we see that there is more and more corporates building up CVCs, trying to invest in startups. They see that they somehow need that to keep up the innovation pace, maybe. So one question I always hear there is, do we have a strategic CVC or do we have a financially driven CVC? So coming to you, Sylvia, what do you think what has a bigger impact on the corporate, but also on Europe and the startup ecosystem?
Sure. So I would say there's no one-size-fits-all for corporations to set up an instrument if it's more strategic or financially driven. But the traditional model should focus on strategically driven but financially disciplined. So there should always be the aspect of financial long-term viability in an investment for a corporation here. But there's also the idea of if it's strategic, then what is needed for the core business maybe at a certain time, or what is the future business that could maybe disrupt the future business and could be steered by investing into a startup in that area. And then there's also different kind of combinations of, and we're going to talk about that as well, venture clienting as part of a CVC, where it's not only just an investment, but also like a long-term kind of adoption or commitment in that sense. There's also a trend growing more in Europe of externalization of CVCs. So either with a single LP or a multi-LP structure. And there's different advantages or opportunities or maybe also difficulties in that sense. Opportunity definitely is that it can act like as a clear VC structure with a governance and long-term commitment, with the KPIs also that a classical VC has. On the other side, the strategic bridge, it differs because it's more financially driven, and also it might lose for corporate branding if it goes externally. But again, I would say it is a good opportunity to look into that for some corporations currently, because you're not dependent anymore on corporate strategy or any kind of turbulence maybe happening inside a corporation.
So it helps you to break you free somehow in the innovation.
Potentially, yes.
Interesting. So I would give the word directly to you, Chris, because you're the investment director at Bosch. So how are you practically doing it?
Yeah. So I mean, Bosch or Bosch Ventures, we are a bit careful to provide guidance to other companies here, simply because Bosch in Austria is doing 1 billion of revenue, which is also already a sizable company. Bosch as a corporate worldwide is doing 92 billion of revenue. So many things that are right for us are not right for the majority of companies. We have set up Bosch Ventures as a purely financial driven VC. So we invest out of a fund structure. We have the 6th fund now with 250 million in. Including follow-ons, we deploy about 100 million a year worldwide. When we do so for financial gains, but also to provide strategic guidance to the Bosch Group. So act as a early tsunami warning system and discuss with Bosch on a strategic level what is happening in the world of startups and in the venture ecosystem. At the same time, we have a venture client unit, which is focusing on the more operational problems and combining startups with the corporate to create benefits in the day-to-day business. So we have addressed these 2 levels with 2 different tools, which is, I guess, fundamental. So if you're a company or a corporate and you want to enter the business, there's not one tool for all your problems. Otherwise, everything will look like a nail and when you only have the hammer. So you need to develop different tools and different mechanisms for different challenges.
Interesting. So financially driven, but still you're, like you said, an early warning system for the group. Very interesting. So Franz, also at Verbund you are doing investments, right? So the question for me is always when we talk about that and about the question we have today is how can CVCs also really play a role in tech sovereignty of Europe? How do you see it?
I think first of all, I'd like to confirm an alliance with Sylvia and Chris concerning the positioning of CVC. For us at Verbund, it's also the bottom line is to have financial returns, but it's a strategic instrument. So we're doing some CVCs because it's early warning signals, and we like to have an impact on the innovation power of Verbund. Concerning corporate venturing and Europe's tax sovereignty, I think CVC is building a bridge between innovations and this aim being sovereignty in tech in Europe. It's an important building block, not the only one, but an important in this field. If you look at the global landscape, we see that CVCs are going to be more important over the time. Just in the last decade, CVC-led financing round doubled from about 700 to more than 1,500 investment rounds, and the value already tripled in this time. So if you look at the global landscape, around 50% of the rounds are with CVCs. I think it's important CVCs don't only offer money, they also offer sector knowledge, they offer first pilots, first proof of concepts, and could also be the scaling partner for some of the startups. So it's an important building block, CVCs, to get to our aim.
Okay, very interesting that you talk about the building blocks, because I heard it already from Chris and also from Sylvia. You talked about venture clienting, and when we talk about corporate venturing, it is more than just investing in startups. There is also the opportunity to work with startups and to be an early and easy customer, right? Venture clienting is at the moment hyped a lot. We see that a lot of corporates are doing it. So how can this approach basically strengthen both sides, Michele, as I know Plug and Play is also doing both?
Yeah, so Plug and Play, for people that don't know it, has two business lines. On one end, we work with around 560 large corporations, and we help them to innovate through matchmaking with startups, and also providing some services also in the CVC space, whether it's kind of due diligence as a service or actually running some of the CVC units for large corporations. So we kind of saw a bit all of the different angles of corporate innovation as a kind of an involved spectator, I would say. And I think that venture clienting is a great tool for both sides of this table, so the startups and the corporate. On the startup side, obviously, because it brings revenue and especially brings validation. When we talk about early stage startups, it's probably the most important thing you can have. $1 of revenue at seed, it's worth arguably more than $1 of investment at seed. Especially if you can prove that you can work with such a large corporation as Bosch, for example. You know, a company that makes 90 billion, it probably has the same internal loops as a country almost. So if, as an early stage founder, you prove that you're able to kind of work through that, it's kind of a great de-risking factor for investors looking at the startup. On the corporate side, venture clienting is a great tool because it can be like a tactical approach to also going into CVC in a sense. You can start to work on some projects. You can try them, you can fail, and you can fail faster. If you try to, let's say, develop internal tools as a company, there is a higher risk of failure, but also a longer time frame of failure, because if you commit a business unit to kind of develop something, then you won't give them 3 months to develop it. You give them a couple of years. A startup, you can say, okay, I want to work with you. You have 3 months to provide this value. If it doesn't work, it doesn't work, honestly, like it's okay. And I think also this is another topic, coming back to the previous question about, you know, learning to fail in Europe. It's something that we have to we will fail at a certain point, you know, there is no way around it. So learning to fail, it's great, and especially it's important to learn to fail fast. Don't keep zombies alive. This is also one of the biggest things that we do as an early stage investor. We try to invest in good teams, and if we see that it's not working, it's not working. Like it's not that there is some magic powder that makes it work. So if you're a good team, it's not working, pivot to something else, and maybe that will work. If it doesn't work again, just scrap it, start again. And I think these are all kind of like benefits that venture clienting can bring also kind of in the corporate mindset, I would say.
Let me briefly underline one topic, especially because we're talking about sovereignty. This buying stuff from startups, buying products and services from startups. Because at the end of the day, we can invest a lot of money in fancy startups and they will have nice offices and nice offsites, that's all good and nice. Unless there are corporates and there's, I don't know, public entities that are actively buying from these startups, there won't be a good outcome at the end of the day. So this buying stuff from startup is super, super, super important.
I totally agree, and I think this thing gets me fired up, honestly. So I think there should be some sort of KPI for executives or large corporates in Europe to have like a number of not successful POCs, but started POCs or POCs that are brought from the beginning to the end per year per company, because again, you don't necessarily want everything to succeed, but you want to kind of like keep doing it until you find the one that succeeds, and the one that succeeds, pays for all of the misses. That's kind of like also the venture capital mindset, from the investor perspective.
Fully agree. So if you're responsible for a department, for a company, or also as a private person, if you haven't bought a product or a service from a startup from Europe within this year, it's a good time to not talk about sovereignty anymore, right?
Yeah, I think we also see more and more corporate venture capital arms working together with the venture clienting units, because it's a great way to test the solution actually you're going to invest, right? This is what I see at the moment a lot, and the deal flow coming from the CVC is also interesting for the venture clienting. So but yeah, it's not that easy, because I led myself a venture clienting department in the automotive industry, and what I've learned is that there are also some hurdles in bringing startups into a corporate, making the collaboration work, and also making it work after the POC level, so it is really adopted and a solution that brings money or efficiency. But I think you can give us here a lot more insight from your daily work, right, Franz?
Yeah, happy to share.
Yeah.
This year we celebrated 5 years Verbund Accelerator, our venture clienting program. So in these 5 years we had about 2,000 startups applied for the program, and we did over 30 proof of concepts and pilots with them. I think most importantly, it's building trust within the organization. Really that you have some internal innovation champions, that you have the decision power for making a proof of concept or a pilot, not at the executive level, maybe at the department level, or even at the expert level, because the expert has to solve the problem, and he should be in the power if it's solved internally or with external partners. And also the procurement process should be quite easygoing. If you look at the time, I think it's also quite important, and here I like to echo Oliver Holle. We have no time to wait, we really have to speed up. If you look at big corporates, when they discuss maybe an important project or maybe doing a new strategy, this could take weeks or months bis there's a decision with external consultancy, etc. Yeah. Last week I had the possibility to participate at the Global Energy Innovation Forum of the IEA and the G7 presidency of Canada. And one sentence and one message really keeps me awake in the last couple of days. It's about the new long term. What do you think, what's the new long term?
Tomorrow.
Yeah, the new long term was the main message at the conference, it's 6 months. Yeah. So that's a complete different perspective when we speak about long term. When it has to be done in 6 months, and we see so that artificial intelligence, etc., really speeding up innovation processes. So I think it's quite important that also with the venture clienting as an instrument for corporates really speeding up and working at the same pace as startups are doing.
Interesting. I think, Sylvia, maybe I can ask you, because you're coming also from UnternehmerTUM and maybe have also a little bit the startup perspective, or you know how they feel. Can you give us some insights on that still?
You mean how they feel about working with
corporates? What is the complicated thing? I mean, now we discussed it from the corporate side, and we have no startups here now, but maybe you want to give us a hint on that.
I mean, the startups are eager to work with corporations because it helps them to get into infrastructure, it helps them to test and validate their products or technologies. But it's again about the setup of the corporation. So you have this old story of a speedboat versus a big tanker working together, but it has changed over the past 5 to 10 years, with examples like Verbund is doing and other corporations. They have really set up these business units and structures to make it easier for startups to work with large corporations.
Maybe one follow-up question on that, because in Europe we have a lot of deep tech startups, which is great, which is cool, but of course you need a certain endurance when you work in the deep tech sector, which makes it sometimes a little bit more risky, and you need more capital and all the things we all know. How do you see, how can corporates and maybe also investors make deep tech collaboration more sustainable, make it easier? Where do you see what can we do to make it easier, as we have so much in Europe here?
Yeah, definitely. So, I mean, we have innovation, we have research facilities that are top-notch in Europe and globally. We also know that deep tech is not about fast ROIs. It's about, I would phrase it, it's about patient capital and impatient collaboration. So it should be really about bringing forces together in the ecosystem, like industry players, like investors, like also public advisors or institutions, to build an infrastructure for startups to grow when they come out of university, when they need still ongoing infrastructure to scale or to test their technology. That means different kind of access to labs or test beds, or also the venture client approach, maybe to start maybe even earlier on. So I would say it's going from pilots to platforms. And with UnternehmerTUM, that's also our purpose, to connect the dots in the ecosystem, to really support the build-up of platforms where all players can come together and work on either an industry vertical or technology. And we've just done this together with Verbund and other players, and I'm sure Franz can also add on it, with an energy launchpad initiative, where we brought together 3 large energy corporations and 3 universities, really fostering the ecosystem from university spin-offs to venture clienting approach, and then to scaling.
This was already a very good teaser. Sounds super interesting. Do you want to follow up on the Launchpad and give us your insights on it?
Yeah, I think it's our ambition is to turn ambitions into practice, into implementation. And what I learned at my visits at UnternehmerTUM, it's always we have the talents in Europe, yeah? We have the university, we have the big corporates, and it's the same size, the DACH region, like Silicon Valley. We just have to cooperate more, do more things together, and to connect more people in order to get things done by a higher speed. And that's the reason why we started Energy Launchpad. It was presented 2 weeks ago at the Venture at Verbund at Easter, and we're starting a couple of new initiatives at the beginning of next year. So, happy if someone in the room is interested to cooperate with us. Sylvia and myself are open for discussions, and we will have challenges on specific themes, like on quantum computing and AI next year, on resilience in the energy system. We will have award for spin-off and startups from the ecosystem. We will do a summer school for bringing together young graduates from the different universities and really push forward innovation. Because if we will be asked by our kids in a couple of years, there should be no excuse why we haven't done it. Yeah? Let's do it.
Very true. So one thing, I like the wording, I have to take that, I think, from pilots to ecosystems. Wonderful wording, I think, and also the Launchpad as an example. This is one thing we can do in order to support deep tech innovation, deep tech startup, the deep tech startup ecosystem. Do you know any, or are there any other partnership models you use at Bosch maybe to specifically bring forward deep tech innovation and deep tech startups, as you're a deep tech company?
I mean, Sylvia, you have just used the patient capital part, right? So that's one thing where CVCs can play their role in the funding ecosystem, simply because most of the times the CVCs have a bit more patience when it comes to returns at the end of the day. And we have a lot of investments in actually real deep/hard tech companies, from chip producers to battery recycling. And the return cycles for such an investment is just a different one than I would have when I invest into a fast scaling AI hype of the day type startup, right? So that's a thing where we can help as CVCs. Another thing we within Bosch do, we obviously open up the doors to the Bosch Group, and as you might imagine, we have a research team, a corporate research team that is helping a lot for some of our investments. But as mentioned beforehand, the biggest validation point we can give is actually buying products from startups, not only investing, but using the products to show that there is some value, and also to create some revenue, which is also always nice.
Yeah, for sure. I mean, we as a purely financial investor now, if I put the hat of plug and play investment team, revenue, it's becoming more and more the metric to look at, because I mean, in deep tech is kind of a different story, but if you think about software now, everything is happening so fast, and the defensibility is just going down and down, because it's easier to develop. You know, it's simply easier to create something on the software level. So revenue is becoming the key metric, and the speed to get the revenue, it's what we look at more and more. And that's both a good thing and a bad thing, because then revenue can change very fast. So yeah.
If I may add to the financial aspect of it, I mean, I think we covered the topic of you need an ecosystem to grow and foster deep tech, but also you need like financial continuity in that topic. And especially if you look at Europe or Germany, DACH area, 3 years ago, there were no real financial instruments on the market for deep tech scaling of startups. It just started maybe 2 or 3 years ago. And for example, in Germany, we have the Sprint, the Agentur für Sprunginnovation, for radical innovation. And it was done mirroring the idea of the DARPA, of what the US department has set up, I would say 50 years ago, which really going into high risk, high reward. And that's, again, we come back to the failure culture. It's really about, I mean, if you have high risk, you have a higher failure culture here. But the great thing is more and more instruments are coming up here also. I mean, there have been discussions early on with the Dachfonds and others. And they just have to be fast as well. With the Sprint, they now changed the process from 6 weeks, which is already fast for an investment of up to 5, 10 or 15 millions, now to 4 weeks to have like a really first investment for deep tech startups.
They're doing a really good job. Yeah.
Also very interesting, I think, because you talk about continuity. So how can we guarantee the financial situation for startups? So what we heard a lot about the Dachfonds already, and I think there is also the European Tech Champions Initiative, which try to close that growth capital gap, right? What do you think? How can we also incorporate corporates here? What can we do to bring them in the Dachfonds, in the European Tech Initiative? Maybe you want to, because you already started, and then...
Sure, happy to start. So, I mean, as mentioned, in the early stages, we now have structures more in place, and there's still potential to grow it further. And then second stage, I think it's a great approach to support CVCs, because in the second stage, it is about industrial adoption and helping the CVCs to cover that mid stage. And then it's the question of how do you scale it? How do you provide growth capital for the startups so they don't get acquired by the US or by Asian markets, and the inventions that are being built here, they could actually stay in Europe?
Yeah, very interesting. Franz, I also want to know your opinion on it, as I know you have also own opinion on that topic.
Yes. First of all, I think DACHFOR is a really important instrument to get implemented. When you ask if Verbund Ventures should invest in the DACHFOR, so that's maybe a little bit complicated because we already have our own venture unit and we're investing directly in the startup. And when there was the decision at the executive board level of Verbund, should we invest in a fund or directly invest? So there was the decision we should invest directly into startups because then we are really quite close to the founders, close to the ecosystem, and we use Verbund Ventures as an early warning signal for disruptive innovations. What we have done, we also did some fund investments to get a better deal flow and a more better connections to the ecosystem. What the DACHFOR could also support is creating more CVCs in Austria. If you look at the top 100 companies and corporates in Austria, how many of them do have a CVC unit?
Not a lot.
And imagine if the top 100 corporates in Austria have a CVC unit just spending 10 million a year. We have 1 billion annually additional for the ecosystem. I think here the DACHFOR could also really support developing this ecosystem of CVCs in Austria.
But I think that's an interesting opinion that, as you said, you have a strategic engagement with the CVC arm you have, and you use it as a radar. And if you would just invest in the DACHFOR, you would maybe lose that radar. It's important to see also from the corporate perspective. Do you want to add on that? I saw you.
No, I just wanted to agree that unfortunately too little CVCs are in Austria compared to the size of the economy and the kind of industrial ecosystem that there is here, but that's true also for the whole of Europe. Only a fraction of big companies in Europe have a CVC, and a lot of the CVCs that are there, unfortunately, are also I wouldn't say poorly run, but there is a misalignment between kind of the short-term incentives of executives in companies, especially listed ones, and the long-term let's say, value creation that venture capital has, because well, if somebody listened to the panel before with about the DACH fund, a venture capital fund has, let's say, 10 years of time span to return capital. In deep tech is probably longer as well. But executives usually have an incentive based on the stock option that is instantaneous. So also being able to kind of like not only say, okay, I will open a CVC, but also say I will commit to this for at least 10 years. And because if you then look at the statistics, I mean, there are a lot of CVC coming up, but a lot of them also kind of die in the range between 4 and 6 years. And this is definitely too early to see any meaningful results. Mm-hmm. So I think this is also another topic that has to be kind of discussed, and especially in the internal discussion of the corporates that want to launch this type of vehicles.
Super interesting. Thank you. I think I have to ask here one question, because it's so important when we talk about corporate venturing on the one hand and about Europe's tech sovereignty on the other hand, and this is M&A. Because in the end, very often we have in Europe the technology, we do early stage investments, maybe also later stage investments, but at a certain point, the startups get sold out of Europe. So they get sold to a US company or maybe an Asian company. So the question for me is, why are European corporates are less active in acquiring local tech companies? What is it? Maybe I can give the word to you, Chris.
Yeah, so obviously I can't speak for the Bosch Group.
Yeah.
But what I notice is when we look at the budget distributions, the amount of money that is spent on external M&A is in US companies significantly higher than we have within Europe. So this idea of I have my own 4 engineers and they are creating the best products because, you know, I have hired them and I have the best hiring process and I have the best and so on and so forth. And the amount of trust people are putting into their own engineers versus the market, right? And that not invented here syndrome is, it's always strong, but sometimes I feel it's a bit stronger in Europe than it is in the US.
Possible. It's absolutely a topic that not invented here, no matter if you do clienting or investing or M&A. Maybe Michele, also from your side, because you're in that corporate ecosystem quite well situated and you see a lot, maybe very objectively also. So.
Yeah, I mean, I'm very much European myself, but Plug and Play is an American company, so also our interest as an investor is not really to protect Europe sovereignty, it's to make as much money as possible with our investments. And to be honest, if a startup comes to me and say, hey, I founded the company, or like I'm an Italian team, so I'm an Italian team, I want to found a company, should I found it in Italy or should I found it in Delaware? My answer is, I mean, go to Delaware. Like, it takes you 3 hours to found a startup there. It takes you 3 months to found it in Italy. Okay, so this is one topic. Then, in terms of the M&A, obviously the IPO market, that's kind of like it's the ultimate goal for a VC. Going public for the portfolio companies is much bigger in the US. It's much easier also to get listed in the US, and in Europe it's still too fragmented. So you can get listed in Italy, you can get listed in the UK, you can get listed in Germany. Nvidia has a bigger market capitalization of Germany. So that's the scale we're talking about. Talking a bit more about what happens like in the M&A, so the big corporates acquiring, I think it's interesting to think about what the most innovative companies are doing in terms of acquisition and in terms of like how they approach incremental innovation versus innovation. And a great example is Google. Google built kind of the Alphabet umbrella, in which they were able to separate the cash cow, so the search business that brings money, and place strategic bets on different business units, on different models, with kind of the same approach that the venture capital has. Like, you know, you great risk in a few bets, and if one works, you know, it creates a business line that is as big as the rest of the company. And you know, I guess almost nobody remembers the Google glasses, but Waymo, Waymo, yeah. The autonomous taxis already active in the US are coming to Europe, and this is a Google company. Android is another bet they did. Pixel, you know, so there are like. This is, I think, the right approach because it makes it easier. First of all, for the business, like for the business unit that is supposed to do this kind of like big shot in acquisitions, since they have the freedom of doing that, and also it's easier in the integration side down the line because you know if you do it in a kind of a test environment, separated with the rest of the company, and then if it works out, you kind of integrate it with the rest of the business. So I think this approach would really help. Obviously, it's kind of a big process to implement this into you know, a massive company like the two we have on stage here. But I think it's always good to at least look at what the best examples in the world are doing and try to take from that as much as we can. You don't have to copy it one-on-one, obviously, it's impossible. But you know, at least be aware of what is working in the market. I think that would be a great first step.
Interesting thought. So coming from that point, what could help us to retain innovation here in Europe, Sylvia?
I mean, if you look at, I mean, retention also equals like ownership of capital, of IP, of scale, and then it all goes back also to how can you incentivize companies to make these bigger bets and then therefore keep innovation in Europe, keep technologies in Europe, because as we all understood, we are a great nation for giving the basis and also accelerating startups, and then also some kind of scale. But when it's about keeping those technologies in Europe, we're not there yet. And But there's things happening. So lots of VCs are raising growth capital funds currently to really help that stage. But we would need more of them. Because in the end, it's not about building more and more startups. It's about keeping the innovation and technologies that we already have or that are currently being built in Europe.
Yes, very interesting. Maybe also from your side, Franz, as I know you are very active in the energy sector, bring together all the different players, let's say. Do you think that closer collaboration between CVCs, VCs, policymakers can help to keep the sovereignty of Europe? Can it help to keep the companies here? And how?
Yes, of course. As you mentioned, on energy innovation, if you look at the global energy innovation landscape, it's changing radically in short time. Looking back maybe 20 years on photovoltaics, on energy storage, on car industry dominated by Europeans, by Germans. Now 20 years later, energy storage, PV, electric vehicles, China is leading. If you look at patents in the energy innovation field, over decades, so, patents in the energy field were led by Germans, USA, Japan, Korea. Within a decade, China's share in energy patents rose from 7% to over 30%. So they're now leading energy patents globally, and especially in the low emissions sector. And you could imagine what is now happening in the next 5-10 years with new innovation in the energy sector. So really China is doing a fast race, and we really have to speed up. What we need, I think we can learn a lot of China, having ambitious targets and having aligned strategies between the public sector, the policies, and the corporates. What is our North Star in Europe? What we like to have in Europe in 10, 20 years, and then we should commit all and work together in close cooperation. Within Verbund, we call it Innovation Symphony. We really have a strong cooperation between inside the company and also with the external ecosystem. And for that, I think it's also quite important to build trust between all relevant players, because without trust, so nothing gets done. And to respond also to Chris' example of not invented here, I think we have to move from not invented here to proudly found elsewhere.
That's a very good statement. So thank you so much. As we have a little bit of time, I can ask one more question, which is very, goes close to my heart, because I think it gives us a little bit of vision, a little bit of positivity now. So if you could just change one thing within corporates, maybe also investors or policy, to strengthen Europe's technological sovereignty, what would it be? I give you now 5 seconds to think about it. Who wants to start? Who is the brave one?
I can go. I think speed would be the single most important word that comes to mind on the policy perspective, because we cannot honestly wait anymore for what's happening in the US, because it's very volatile, to say the least, what's the decisions that are made there. So I think from the regulator's perspective, we should kind of start to think independently about, what's the direction that we want to take, and do it fast. On the corporate side as well, if we talk about CVCs, investment decision, let's take them fast, because if you wait 9 months to make an investment decision, maybe the startup is already failed. So it's again speed. And on the startup word, I mean, speed was always kind of the mantra. So let's keep that going.
Speed.
Yes.
Good. Thank you so much, Michele.
Yeah, traditionally I reply to these questions by more stuff from startups, but I have already mentioned that beforehand, so I use a different thing here. When we're looking at speed and that proudly invented elsewhere, I've seen a couple of times that once a corporate decides they want to have a venture play in some kind of way, they take the young guy from the innovation department and give him a special task, and now we can build it in-house, right? This is already a fairly mature market, and it's a good idea to hire externally for these topics to have more speed and to prevent that not invented here syndrome. So if we do that a little bit more often, I guess we can get more speed on that.
Great, something corporates can directly try and do. Sylvia, what's your take on that?
I think I would see if there's a way to institutionalize maybe commitment or commitment frameworks next to speed. And speed has always been there, or the ask for speed. And I think it's just difficult because many ecosystems are also siloed in Europe. It's not that much about collaboration as it could be maybe or should be. So it's really about, I would say, the commitment of the ecosystem of working together, helping the deep tech startups scale and stay in Europe. And those include industrial players, policymakers, research facilities, the startups. And the commitment for me, it's not just, as it's usually unfortunately happening, 5, 10 months or maybe up to 2 years or something like that. These are just time frame indications. So there should be commitment, also maybe government support for 10-year commitment of really building out infrastructure that can help deep tech startups.
Thank you so much, interesting. Franz, from your side.
It's all about mindset and taking maybe more venture mindset because it's clear the challenges are wealth in Europe is at risk, and really should take action now and having really closer time perspectives. When there was the opening of Nick and Daniela, next year really should be a fund established in Austria and already taken first investments. Maybe there are 5, 6 new CVCs in Austria. It's really about taking action and be brave and be fast.
Yeah.
That was a very nice closing sentence. Being brave, I think we talked about the topic of corporate venturing, no matter if it's clienting, if it's M&A or CVC. We saw it from different perspectives. And I hope a lot of corporates are going the same way and are supporting European tech sovereignty. Thank you so much.
Thank you. Thanks a lot.